Welcome to Optimum Forex Trading. My name is Rubina and today is Saturday, the 14th of October 2023, just before 9 a.m. In Zimbabwe, where I am. I'm here just to do my market review for next week's trading. But before I get into that, let me just get all protocols out of the way. This is my trading journey. Therefore, this is the journal that I keep, and it should be viewed as entertainment only and not used as any form of financial investment or trading advice whatsoever. I come, I trade, I analyze, I post. Sometimes I get it wrong, sometimes I get it right, but it's just my journey, and I would like to use what I record and upload as my way of backtesting and improving on my strategy. I trade ICT concepts, especially the 2022 model, which includes fair value gaps. And I've also integrated order blocks, or should I say I'm learning how to integrate order blocks in my analysis and trade those two concepts. But the main one that I focus on is fair value gaps, which can be classed as CBs if it is a sell model, or BCs if it is a buy model. BC, which is buy side imbalance, sell side inefficiency, or CB, which is sell side imbalance, buy side inefficiency, which means that area of price hasn't been repriced yet, and price might be coming up or down to reprice it before continuing in whatever direction the market is going. So before I do my analysis for next week's trading, I would like to touch on this open trade that we have, or that I have, the position trade that I traded or entered on Thursday, 12th October, at the price point of 1.231, and I was tagged in at different price points according to my broker's spread, I'm assuming. Like I said, I'm still learning, so I'm not 100% certain as to why the price points were different on 8 cap and Think markets. Nevertheless, we were tagged in, and we still are in the trade. And if you watched the video that I posted yesterday, I had mentioned that Bespoke was transitioning from 8 cap to Think markets, and I already had an 8 cap account with them, or 8 cap demo account with them, which is this one. And they had advised that we close all trades at least 4 hours before market close on Friday. And if that didn't occur, they would do it for us and move it over. So if you look at this, we've managed to come out of drawdown, and I'm in profit of just over $300. Entry was here, and I was closed out there. So I'm not sure if on Monday, because I'm still waiting for them to send the credentials through for the new Think Markets account. So I'm not sure if when they do send those through, because I've just checked my email and nothing has come through yet. But when it does come through, will my trade still be open, this one, or will they have closed the trade? These are the trades that I got into last week. Ooh, what happened there? Sorry. These 2 trades last week, and then I didn't trade anything else until Thursday, the previous week before last, sorry. And then I didn't trade anything else until Thursday. So I've taken those trades so far. They were here somewhere. So anyways, so like I was saying, I'm not sure if it's going to be a continuation, as in my equity and open positions have been transferred over to Think Markets, or if they've closed them automatically for me and I have to re-enter. If I do have to re-enter, I think maybe I'll just have to wait for Tuesday, and maybe the first Think Markets account, which is this one, will probably have given, because this one is still open, will probably have achieved the profit target, depending on how Monday paints, like I always say. So where that's concerned, I will do a quick update on Tuesday. That's if I feel like there's no need for me to update on Monday. However, if I feel like maybe it is important I update on Monday, I will give an update on Monday, just so that I keep track of what's going on where my trading journey is concerned. So just going back again to trading view and looking at price where we are right now before next week's market review, we can see that on Thursday price did come down. It went through, I removed this, let me put this back, this BC that was on the H1 in my previous videos is there, came, traded through it, came up just to under consequent encroachment of the H1 BC, but it came and used these price points as resistance, then started coming back down, went and traded through this. On Friday started making its way up to again the same price points, I guess, of this BC here, which it came up to reprice. Can you see that? It's incredible, isn't it? Almost same price area. This one closed at the low, sorry, if you look up here, the low of this candle here, 1 hour candle, was 1.22250, and the high of this one was 1.22255. So a 0.0005 difference into this leg. But still, even if we had used the consequent encroachment of this inversion fair value gap, let me just show you, like halfway point, and let's put our 20 pips there. The halfway point is where the text is. That's just about halfway, instead of me using my fib to measure, but where the text is, that's halfway point. So if we had put our entry at the halfway point, would have been tagged in and would have gone down. That's if I was trading on Friday. But this is just so that I can remember these positions in my future trading. So price did come back up, and it did come up after the 2 to 3 a.m. candle, because remember, normally London open creates the high of the week and at times the high of the day. So had I come in and seen this trade lower, I probably would have assumed that it's creating a CB. But because I have to wait for price to come back and reprice or leave a gap, I would have waited. Price would have come up, repriced the H1 BC, and then made its way down. So whether I would have traded this on a normal day and taken a loss because I would have made some mistake of not waiting for the 3 to 4 a.m. candle to close, I don't know. Nevertheless, I wasn't in this trade because I had already gotten on my Thursday trade, and I don't trade Fridays. So price did come down. It is now trading within the weekly BC, which could turn into an inversion fair value gap if Monday's price leg trades below it. And again, like this area here, price can still come up, maybe up to this price point here, reprice it, and then continue down. We will watch and observe what price will be doing on the Monday. And if you remember correctly, I had said I am looking at this level here. I'm very watchful or mindful of it. And I had written that could this be the low of the year so far? I don't think it is, because we are still in October. We still have November to paint. So price can continue all the way down. So I don't think it is, but, and also bearing in mind that we still have this swing low level that's very close to it, and other levels that I am going to highlight as I'm doing my market review. So for now, I am going to pause the video and render it, then come back with my review for next week. And I will clean this chart and you'll see me do it. Okay, let me just render and then I'll be back very soon. Okay, great. So let's just move up to our monthly and clean the chart and have a look. I want to leave my entry tool open. So let me do this. Okay, so our chart is clean. Let me just double check that there are no levels on the daily or lower time frames that I have forgotten about. Yes, they are. So let me take this one off and this one off and that one off. I'm happy with how it's looking so far. Righty, so let's go up to the monthly and then do our review for the next week. Actually, I would like to look at how price is sitting, or where the yearly candle is concerned. Well, we don't have a lot of candlesticks there, do we? But anyways, this is our year, or years, since 2006 up until 2023. This is how the market is looking so far. And just by looking at this, we can see that since 2008, we have been moving lower in price. So since let's put it this way, since the upload of this information on TradingView, this is how the market has been looking. I'm sure those who have been trading longer have a different setup. Maybe those who've been trading using MT4s or MT5s, I'm sure the setup is different, but I'm just looking at my chart, and I've only been in this industry going into 2 years now, so this is what I have. Okay, so anyways, we can see that the market has been predominantly bearish, right? So now looking at this year, where could price be heading? It is possible that if it continues lower as the year progresses, it could be going for the swing low here, and clearly it could be going for that swing low there. Whether the next 2 months of price will paint and come all the way down to this swing low here, I do not know, and I will not try to predict it. My job is not to predict the low or the high. My job is just to trade up to where I get profit and all. So having said that, I am going to measure my tails to see where the PDRA could be sitting for the year. So we have, this is, let me look at this properly, from this angle up to this angle. Okay, 1209, I'll put it at 5 to the nearest round figure, 120095, and I'll mark this as the year 0.5 level of the fib, and then I'll just put discount below, just in case market decides it wants to come to this level, discount, and then maybe beginning of next year start making its way up to probably reprice the wick and proceed lower. We will be analyzing as we go. Also, I would like to highlight this as well. It is another possible draw on liquidity. This is the 2020 low, and it is sitting at 14119. So I'm going to put it at 14120, again to the nearest round figure, and this is 2020 low. Let's put the year so that I remember that this is a year, because you know when you're looking at this on the lower time frame, you start getting a bit confused as to what you're referring to. So this is just looking at possible areas where price could be drawing to during the course of 2023. But remember, we still have quite a long way to go to reach this, but it's possible that it could happen. So now let's go to the normal time frames, and we're looking at the monthly time frame, and looking at price from the monthly. Let's put that there properly, and this is the midpoint, so sorry, I just need to put that right in the center there. So looking at price at the monthly, we are within this order block. We are also coming close to this swing low. We also have this busy right here, so I will highlight that right there, and this here is the monthly busy, and I'm going to put my monthly, and then I'm going to put if price trades through, it could be used as an inversion fair value gap. Trades and closes, trades through and closes below, and closes, where's my end? Closes below, it could be used as an inversion fair value gap. So that's our monthly, and we are currently trading below the mean threshold of this bearish monthly candle where price is. We look like we have left this gap here, so it could be trading lower for the month of October, and maybe it will come and reprice it over the next course of the months coming. Okay, so dropping down to the weekly time frame, I'm going to mainly highlight the places we are going towards compared to where we are coming from. So we can see that we still have this gap as well on the weekly, and I'm just going to extend the monthly down where repricing of the entire gap is concerned. And again, looking at price, we've got this swing level here, right? We've got this swing level here, and also this busy. All right, and let's look at price. We're looking here, this order block here, that's where it came, rejected off, and closed just slightly above this price point. Can you see the body of this candle and the wick of this order block right here? They're just about respecting each other. Okay, and then so price next week can open, trade up a little bit, and then hopefully start making its way down so we can be in profit and get our second phase passed. All right, so we've got this next draw on liquidity right here. You can see if price trades lower, it could be coming here. So let me just maybe bring my tool a bit lower where take profit is concerned, because I'm looking at this level here, and just scooping over to the left, I can also see this level that I had marked. You remember it on the daily, asking if this was possibly the low of the year so far, which clearly it doesn't look like it. I will put it in here because again, it could be used as an inversion fair value gap when traded through, and price could come and reprice maybe up to this level. Let's put this on the daily. Okay, I'll just leave it open like that because I know that's a busy, and I've also got the same note here on the monthly, so I don't need to repeat myself. But if price does trade through and closes through, it could then over the course of the next coming weeks or months trade up to this price point or to this price point here, use that as an inversion fair value gap, which could be used as resistance, and then traded lower. So where cable is concerned, I think I'm very happy with the way I have reviewed it so far and with the way it's positioned. I don't think there's anything else that we need to talk about, because even this order block here, as you can see looking there, price has actually traded through just almost halfway through it and just touching the high of this candle here. Okay, where price points are concerned. So yeah, I think I'm happy with my analysis where cable is concerned. I'm still bearish for the month of October, but the candles won't paint in one direction throughout the month. Clearly, as what's happening here, it will come, retrace or pull back, make its way down, pull back, make its way down until it gets to the bottom of this year's market, and then start making its way up, pull back. We'll be trading as and when the market shows us something that is interesting, and we are happy to get in. And then let me just highlight this H1 busy again. So here we are, and then I'm going to put this as an H1 because we are closer to this level where price is concerned for the coming week. Sorry, H1 for the coming week. We're actually closer to this busy here and these relative equal lows. So if price does trade through on Monday, it could use these levels, these lows, as resistance and start making its way up. And also looking at price here, it could open up, come up to reprice. It'll probably just trade down a bit and then come up to maybe reprice this CB here, come up to this order block, which is also same price point of these relative equal lows, which is also within this inversion fair value gap, and start making its way down. So I'm still looking for lower prices where cable is concerned, but also acknowledging that price can pull back first and then start making its way down. How far up it will pull back, I don't know. It's just levels that I'm watching. My interest is to enter when it starts going in my presumed direction. Okay, so I'm going to jump from cable to DXY and then just do my quick reviews of these other 4 asset classes. But I would like to spend a little bit of time on DXY for now. And then because you normally compare the two, because when DXY is bullish, cable should be bearish. When both are bullish, then it's possible that it's in a consolidating market. So let's look at DXY real quick. Okay, so we start off by cleaning our charts. Okay, right. So I think I will also go on the yearly, like what I did with cable, and look at what DXY is showing us on the year so far. And looking at price action, again, this is from 1967. Wow, this is incredible, isn't it? So from price action per year from 1967 up until 2023. And let's assume that the drawn liquidity where DXY is concerned is up here, which is the 120 levels that I spoke about last week, right? And should it continue up, let's assume the next draw on liquidity is up there. This is maybe for 2024 or 2024 and thereabouts. Can you imagine if you're a person assuming that you were able to get a buy entry from here and you can hold it for the next 2 or 3 years? Just hypothetically speaking, where do you think you would be in 2 years if you could just position trade and price acted in such a way? It's incredible, isn't it? But anyways, let's look at price right now and try to make sense of what we are looking at on the yearly. As with cable, we have a very long wick here, which we could measure to see where premium is. Where cable was concerned, we were looking at the discount levels, because price has to draw to discount, which is the PD arrays. It has to draw to discount for us to be able to buy from discount, and it has to go up to premium for us to be able to sell from premium. So the same goes here, that price has to be in premium for us to consider selling down to a level of discount when we are trading DXY. For instance, I don't trade DXY. I only trade one pair, which is cable. And I'm learning to trade US 100, though I'm not showing it because I'm not trading it, but I'm observing it, because I would then want to transition over to the stock market maybe in the earlier part of 2024, or I could still continue trading currencies until such a time that currency trading is no longer available, if it ever happens. But for now, I am very happy with cable. And at the back of the screens, I am learning how to trade US 100, though I'm not taking any actual trades off that market. I just want to be aware of what's going on and be familiar with the market, that if the time comes, I will be able to trade it. So let's just put that price point here. And then instead of us writing discount below, we are going to put premium above. So this is here, and that's the 0.5 level, and then we will put premium above, so that when price is now trading above in premium, we could be looking for lower prices, meaning DXY might look to retrace or pull back for a bit before continuing up if the next draw on liquidity is up here. Okay, right, great. So that's the year. Let's drop down now to the monthly and have a look at what price has left for us, the footprints that we could look at. All right, so this is the monthly. Okay, so noticing that so far we have left this busy here. Again, as price trades up, it could at some point in the next coming months come to trade down to reprice this busy and then continue making its way up to the 120 levels that we spoke about earlier. This is the swing high. We also have this CB that's on the monthly time frame that we need to highlight and see where price is trading where that's concerned. It hasn't quite reached the mean the consequent encroachment level. It hasn't quite reached into premium yet, though it looks like it's drawing towards it. So we will change this to red since we are looking at a CB and not a BC, and inside we will write our month, and this is the 0.5, and we will also put premium above, and we'll also put if price closes above CB, it could retrace and use it as an area of support. Okay, all right, so if it does trade through it, as in it closed above here, it could come down and use it as a support whilst trying to make its way up to the 120 zones. And these are the levels that we could be watching, the support levels, looking at this order block right here. This is the support level price point. So we are also mindful that we have a BC here that price could eventually look for coming towards before making its way up. That's if it is continuing up. And then just dropping down to the monthly real quick. All right, and the weekly, sorry, not the monthly, we've just come from the monthly, and we can adjust this as well for it to come up to this order block so that we have the entire range where the CB is concerned. Okay, so we have buy side here that price hasn't tapped into yet, so we're going to highlight that. This is the weekly, so we'll put this as week, and then buy side. So buy stops are above here, and if you notice, the buy stops are actually where consequent encroachment is, and just close to where the 0.5 of the year is. Remember that wick, just close. So it's possible that price could come up to this price level here and then start rejecting to reprice some BCs that would have formed on its way up and then continue up if the stretch is up to here where those other relative equal highs are. Let me see if I can see them off the weekly. No, let's just go back up to the monthly so I can show you what I'm talking about right here. These relative equal highs, let's highlight them. Just use this area, and we are on the monthly, so I'll put this as month relative equal highs. Okay, so if price does trade through this high here and it looks like it's continuing up, it could be going up here. And looking at this, we also have a CB right there on the monthly, and can you see how perfectly price came up, repriced it, and then started making its way down? So it's possible that this next leg following could actually trade through it, come back, use it as a form of support on its way up. It's possible, but we do not predict the market. We make assumptions and then we trade accordingly. So we have this on the monthly, that's a CB, so price could be drawing up there, and this level right here as well. Price could eventually come, but it's just close to the premium on the yearly. The 0.3 is just above it, so I won't highlight it. I'll leave it there because I'm sure this is not going to take a week for price to achieve all this. It could take months. All right, or rather it could take weeks. I think it sounds fancier that way. It could take weeks because it still can come up here and then make its way down to reprice this BC and then start making its way up again. Anyways, so there we are. Let's just drop down to the weekly where we were real quick and see if there's any price points that I probably missed. We did trade just above this buy side, right? We repriced it here, or we traded above it, came down a bit, and then we seem to be making our way up. So these are the areas that I'm happy looking at. Maybe let me just anchor my premium level to this wick here. Okay, right? So we could be seeing higher prices on the dollar and lower prices on cable. Again, price could open next week, trade down into an inefficiency that it left here and then start making its way up. We also have this long wick here that if we were trading DXY, I would also highlight it using my fib. Look at the let me just do it just to satisfy my curiosity. Okay, like I've highlighted it here. Right now price is just below premium, so we are in discount. Right here, if we're in discount, we should be looking to buy up. However, we can wait for price to come down a little bit lower, as far low as we are comfortable with, and then start looking at price going up. Let's just drop down to the daily and see how it looks like. You see here, looking at the daily time frame, we've got this bearish leg here, and this happened during that retracement, so the pullback and then the launch. The same happened with cable, where we had it's trading up and then now it's launching lower, and this was trading down and now it's going above. So this here was our weekly fib leg. We are trading in discount. Price could open up, come down maybe to this level. If it's going to come all the way down here, it could and then start making its way up, or it would come down and then reprice some areas within the daily candle and start making its way up. So the long and short of it is, where DXY is concerned, I'm also still looking for higher prices for the dollar on its way up to this buy side, and if it trades and looks like it still wants to go up, maybe to this yearly wick, and maybe to come and completely reprice this monthly CB. Again, this could take a very long time for this entire leg to occur. We will be looking at price pulling back, going up, pulling back, going up, pulling back, until it eventually reaches target. So I am bullish on the dollar and bearish on cable. Quickly looking at this, where US 500, US 100, US 30 and Euro are concerned, I'm just going to do the weekly reviews, and that's it. I won't go in detail where those are concerned. Right, looking at US 500, we see that it came to reprice this CB, and it looks like it is now ready to make its way down. This is quite a very long rejection wick, though it did close bullish. It could open up, come up to consequent encroachment, or not consequent encroachment, sorry, the mean threshold of this wick, maybe into premium, looking at the PDRA matrix, and then start making its way down. So my draw on liquidity where US 500 is concerned is at this sell side here, and we've also got a void right here that it would come and try to reprice before making its way lower. Maybe ultimate target for 2024 going forward is this swing low, and probably this swing low here up to repricing these voids or any gaps, but we're talking about months here. So anyways, for the next week or the next month, or the month of October, sorry, where US 500 is concerned, I am bearish. And then looking at US 100 on the weekly time frame again, you see this price looks like it did come to refill this CB and opened, went up to this, the body of this would be an order block. So the body of this order block, and looked like it rejected off it and started making its way down. So the draw on liquidity could be these relative equal lows for US 100 and also this BC here, and we've got a slight little liquidity void here again, where price could be coming to reprice or refill and start making its way lower. So the swing point of US 100 is very recent, as in if you look at this price, is July 2023, so it's very recent. So if US 100 is looking at lower prices, it's only just started turning. Okay, so this could be a turn from a bullish leg now going to a bearish leg. How low it will go, we don't know. We analyze every week and then trade is executed accordingly. But the long and short of it again is I am looking for lower prices on US 100. And then looking at US 30, let's go up again to the weekly. Yep, same. US 30, our swing was July 20. US 30 weekly. All right, again, relative equal highs formed between July and, between 24 July and 31 July. So the month of July created relative equal highs, then price started pushing a bit lower, and then the beginning of October came up to reprice this CB and come to this order block right here, right? And then looks like it's going to make its way lower. It could again trade up since it closed bullish, open, trade down a bit, start making its way up to come and reprice this inefficiency here, maybe even up to this order block, and then start making its way down. So I am still bearish as well on US 30, though it could be bullish to start off with and then start making its way down. We've got sell side here, we've got sell side there, we've got sell side here. We also have this inefficiency right here. So it is possible that the higher time frame, as in the next few weeks going into the next few months, we could be seeing lower prices for US 30. So I am bearish on US 30 as well. And then quickly on euro. Oh wow, that's an incredible, where was I was on the daily, was I? Let's just have a look. No, I think I was on the 1 hour. Let's look at this drop right here. When is this? On Thursday. Look at this drop. This must have been some news announcement that added this volatility to the market, because normally price moves without big leaps or drops. But this drop here must have been was there news on Thursday? Like I said, I don't trade the news because ICT teaches us that the news really doesn't change the direction or overall direction of the market. It just adds a bit of excitement to it. If the market is bearish, it is going to go down. It could come up first to reprice an inefficiency and then continue down. So if the market is bearish, it's going to go down. If the market is bullish, it's going to go up. And the news is just a catalyst where momentum is concerned, but it doesn't change the overall direction of the market. So by having these market reviews and analyzing the market, we want to create or have in mind an overall bias, so that when we come to the market, we are waiting for that bias to pan out and then we execute accordingly. Right, so we've just jumped back up to the weekly. As you can see, we have been having lower prices in euro from July of this year. We've been going down. So I wonder where we could be reaching in euro. This here is last week's low, so it could trade below last week's low, maybe coming for this order block right here, the mean threshold of it. Let's have a look if we just measure the wick. from here right to there, right? So it could be coming to the lower level of this wick here, and then if it trades below it, it could be coming to this swing low level here, and also to come to fill this busy, this inefficiency right here. So just like with cable, we could open up, see it come up to reprice some inefficiencies within this weekly price leg, and then start making its way down. So I'm still bearish on euro for the month of October. Again, price could really reconcile next week, make lower prices, then close. I mean, price does what price wants. All we do is wait for our setup. If the setup doesn't occur, we do not trade. So yeah, that's it. I think I am happy with my analysis for the coming week. I'm still bearish on cable, and I will then come in on Monday and see if my 8-cap account was closed and I need to maybe make my way back into the market before the second phase target has been reached, and then I'll make a decision on what I'm going to do where that's concerned on Tuesday. If I need to record on Monday just to show you the new account and where we are in price, where the new account is concerned, if I'm still trading, as in if the market is, the position trade is still open, and or if it's not open, I will show you. If it is open, I will show you as well. Sorry, I just want to clean up my my levels so that I can have a look at them when I'm on the lower time frame. I think I've extended these zones a little too far. So when I go back to the 1 hour, yeah, I need them close so that I can see them and see where I am in relation to my PD arrays, and look at what price is intending on doing there, and see what we're going to do where trading is concerned. Okay, so that's it, guys. Thank you so much for sticking by, and I will see you next week. Bye bye.